obviously the silver market in terms of premiums, if you look at all the historic charts, go back to the 2008 global financial crisis, we're back at those levels now. And what surprises me the most is the fact that we're at those levels and we still haven't had any bank failures again, any type of true fear yet.
Well, hello there, my friends. Chris Mark is here with you for Arcadia Economics. And in today's show, we're going to continue with the broadcast from SilverFest, which was just about a week ago. And in this particular one, we talked with some of the retail silver dealers to dig into everything that's been happening with premiums, the supply chain, and which silver products are available, what they see going forward. This was with James Anderson of SD Bullion, Ian Everard of ARC Silver, and James Forsythe of Silverback Precious Metals. So it's a good panel with a lot of good information, and I think you'll enjoy it. So here we go.
It is now time to talk about the latest goings-on in the retail silver market. We have Ian Everard of ARC Silver Investments joining us, possibly James Anderson and Jim Forsythe running a little bit behind, and they may join us as well. But I know we have a lot of questions, and certainly been active times out there in the retail silver market. And Ian, sure appreciate you joining me. And how's everything going with you today?
It's good. Thank you, Chris. Bit of a rush getting ready. I'm home alone looking after the dogs today. So they're behaving. So that's good.
Well, I'm glad you were able to make some time. I know you've been quite busy because in addition to getting silver to a lot of people, been harder to get many of the products, and perhaps you can start there and just let people know what you're seeing in that whole supply chain. Obviously, they've seen increased premiums. I know some people are calling in and asking for certain products and they're not available. So maybe you could start there for us.
Yeah, there's just a lot of product on the wholesalers. That's going to be a month to 2 months to come in now. I don't like doing that because that ties up cash flow, so we try to keep the inventory live. So yeah, I've noticed a lot of the online guys, a lot of their product is showing notify me, unavailable. And I'm also hearing from the European mints that their supply is constrained, partly due to the energy crisis in Europe and partly due to the lack of supply of 1,000-ounce bars that they make their product from.
Yeah, and perhaps that'd be a good place to start, where there's some degree of there's issues in the supply chain or bottlenecks at refineries versus some degree to which we're seeing silver leave the exchange. What can you comment on there so that we at least leave things clear for people? I don't want people thinking, okay, we're running out of silver, there's a silver shortage, when that's not quite the case. But how can you distinguish between those two factors and how much, if any, we're seeing of each?
Well, I chat with the president of one of the major European refiners most weeks now. He just very kindly is mentoring me, teaching me about the industry, the history. And his very words were 2 weeks ago, the European mints are taking contracts off the Comex, turning it into product, and that product is never going back on the Comex. So what he means is, by the time you turn it into, say, an Austrian Philharmonic, that's very unlikely to get recycled in the next few years. It's not going to get back into the 1,000-ounce bar.
And you've also mentioned, though, that in terms of getting 1,000-ounce bars, that you've seen that they're still available, but as opposed to the sizes you saw a couple months back, it's less available currently.
Yes, I've got one supplier I use a lot. Typically would have 100 bars live, and then they would top that up each week. About 5 weeks ago, they asked for 100 bars from the Royal Canadian Mint, and they were sent 40 bars. So they were sent 40% of what they asked for. Other wholesalers who typically have 10, 15, 20 bars live, quite often I ring them up and I buy their last bars.
Okay, and with that said, welcome on in, Jim from Silverback Precious Metals. Good to have you here today. And how are you doing, my friend?
Thanks. Sorry, I am late. I saw Ian's phone calls. I was trying to get the laser working.
Well, it's good to have you here now, and I know that you're in a different side of the silver market where you're actually chopping up some of these bars and making them available. And perhaps you could just give an overview of the conditions you've seen in terms of the availability of silver and some of the delays in the products and what you've been doing.
Yeah, I mean, things were really slow all summer, I'd say, and then I think around when the Bank of England pivoted, we saw a real pickup in demand. Since we're new, some of our pickup in demand could be attributed to us getting, past that curve. We also we wholesale, and so we also talked to a lot of retailers, and they're definitely seeing really huge demand. I mean, we sold more than we had in entire year business. But I got a call the other day saying, "Hey, I hear you guys. If anybody's going to have 1 ounce rounds, it's going to be you guys, like livestock." So people are really starving for livestock because if you think about it, you have a certain amount of capital, and you expend that capital, get product, and it takes 2-3 months to get that product. You're only turning your capital around once. Whereas if you can get livestock and the demand's strong, you can turn it over every week. So yeah, 1 ounce rounds definitely getting scarce. We had one of the companies working with us said they had a private buyer want to get 6,000 1 ounce rounds, 7,000. We're waiting for our next shipment next week. So I called Ian, and Ian was able to get hold of some somehow. But
yeah, I know things are getting harder to get, and we have a question coming in here from Peter. Why don't bullion dealers take 1,000-ounce bars off the Comex directly? Retail is buying them after all. Ian, I know you've been doing that to a degree, but any thoughts on Peter's question here?
It's convenience and timing. As Rob and Rafi, when they showed that it can be a complex process taking a contract, you have to put up the cash for 5,000 ounces plus 10%. You have to comply with a whole load of rules and regulations. It's a moving target. And then you might, which depends which month you're picking. You're picking a month ahead or 3 months ahead or 5 months ahead. And going back to what Jim said, do you want to tie up your capital for 3 months? Or I can ring a wholesaler and we've got them. I send them the money. I get the bar within a few days, or the bar can be directly delivered within a few days usually. And the total cost, if you count all the transport, the insurance, it's not a huge saving taking the contract.
Okay. And Jim, any thoughts on that one?
Yeah, I agree. I mean, we're not directly taking them. I mean, we're getting them off Comex, but indirectly through either Golden Eagle or off of Ian. We did some off of Kinesis, although that wasn't off Comex. That was private sales. And yeah, maybe it costs a little bit more, but like Golden Eagle's able to get a good deal because they get truckloads showing up and they're stocking inventory for us. So they keep 20 to 40 bars in stock for us. And then we draw on them as needed. We do have a friend that was like Rafi was trying to do it himself. He was working with a broker that's done this forever. And then they said, well, since COVID, we're not allowing physical loadout. You can buy them, you can get them delivered to our warehouse, but we don't allow you to actually pick them up. So he's trying a different broker.
All right, and we have James joining us. Good to have you here. We were just talking about the 1,000-ounce bars and what they're both seeing there, where it seems like increased activity around those. Obviously, you're part of SD Bullion, and what are you seeing there?
On 1,000-ounce bars, I know premiums have gone up. It used to be you get them just a few cents over spot. Now, I think 60 cents is pretty average for people when they, add it all up, take delivery of 1,000-ounce bars. So, I mean, it's like a 10, 20-fold increase sometimes, depending on who you're talking to in terms of securing those bars. And obviously the silver market in terms of premiums, if you look at all the historic charts, go back to the 2008 global financial crisis, we're back at those levels now. And what surprises me the most is the fact that we're at those levels and we still haven't had any bank failures again, any type of true fear yet. And so my contention, I think, is moving ahead. Not to say this is going to happen anytime soon, but there will come a day and time where these 2008, 2022 premiums are going to be looked back and seen as being less than what they eventually become at some point in time. I just don't know exactly when that'll happen, obviously, but at some point these premiums will be dwarfed, I think, when it all gets said and done.
Yeah, I guess that was one of the next questions. That do you see the premiums coming back down? Are we ever going to be going back to some of the lower levels? Or
yeah, I think premiums will come back down as you see spot price going from 22 to 30. There's going to be a lot of people who are not going to be wanting to buy at that point, so dealers are going to have to cut their margins and in order to get volume. I heard people griping this week about how sales upped and went away essentially because you had spot running from 17 to 22. So yeah, I mean, in order to get excitement and to get new blood into the market, you need to see silver moving and the momentum traders coming in, and you'll see that, I think, once you get silver threatening 30 and getting beyond it, you'll see a lot of people piling in then because they don't want to miss the race.
Yeah, that's something I've wondered about, where certainly we wonder if supply comes back on the market at the higher price, if some people are selling. And I could imagine certainly some people who maybe are just tired of the wait and they see $30 silver and say, all right, maybe sell some back now. But James, like you pointed out, if we finally crossed over 30, I think we all still remember what happened a year and a half ago during the silver squeeze. Perhaps that's what it takes for some more mainstream demand to come in. What do you think there?
Yeah, I think that's when you'll see the large leveraged hedge funds and the bullies of the market, like Paul Tudor Jones described a year or so ago. You're going to get leveraged longs coming into the market, and they're greedy, and they're going to come in and no momentum trade spot, and that's how you get silver running up very quickly. So you'll get a bunch of people looking for scalps and quick trades. So I think people forget in the historic realm, when you look back in the United States history, there's been multiple times where the longs on the Comex and the longs, in other trading arenas who've come in and blown the price multiples. And so the late 70s was one example of that. You saw silver and gold both do extremely well, and that was pushed along by leveraged longs on the Comex. And you also saw it happen for history buffs out there. Back when the greenback, after the Civil War, you had gold go from $20.67 to $163 in a short time frame. Supposedly there was conspiracy involved with the vice president at the time and his family members, but there was a time where you had gold run up a wall there and eightfold very quickly. So, and that was all done by phantom gold, as they described it back then. Phantom gold is just levered long derivative paper gold, and so to see history repeat in some form or fashion in the future won't surprise me. And you don't need physical to have it happen. You just need levered longs coming in mass quantities.
Ian, any thoughts on those premiums coming back in potentially?
I hope they do. It seems very unfair that a 1 ounce round is like $5 plus retail. Hopefully at the end of the show, I'm going to put some offers out to just give some people some opportunity to get sovereign mints for below the price of rounds. We bought well. We bought early before the premium rise, before the spot rise, and we want to share some of that joy. I think the only cure for high prices normally is high prices, but the problem is with the industry, there doesn't seem to be the capacity to produce extra product to bring that price down. We're limited to 7 world coins if you count the Armenian Noah's Ark as one. The Eagle is a basket case. They're only making thousands, tens of thousands, and they should be making millions. It's almost down to the little guys like Silverback, little at the moment, to say, heck, we can do something about this. We're going to make our own product or get our own product made. And Kinesis are going a long way to doing that. And I think when the Kinesis brand gets more recognition, they'll be doing more 1 ounce rounds. I wouldn't be surprised if they do a Buffalo round soon, and then we can bring on some competition to the traditional market. It seems a bit reluctant to ramp up production.
Yeah, I think short-term premiums may pull back. I know this week was a little slower than previous weeks, but long-term, I can't see demand going away. So then the question is production going to ramp up, or is demand going to slow down? I don't see demand slowing down. So Yeah, so we made a bet on that to say let's get our own production. We're casting about 5,000 ounces a week. I'm looking for more equipment. Ian is looking to join in on that, and then the slicing. We can add more saws. We're thinking of doing that through kind of a franchise, and we do see demand picking up for that because our premiums for slices has not changed since day one. We've got those priced out, and they continue to be the same price. And so they're starting to sell more and more as these premiums go up, which was the plan all along. Was make up with volume rather than premiums because we can expand capacity.
And Jim, you mentioned that you don't see the demand going down. I think you may well be right, but what is it that leads you to think that, and why do you think it'll continue at the current rate with what's going on? Is it just the events happening in the world and the financial instability or the attention on silver, or what leads you to feel that way?
Well, I'm a big believer that we are going to be returning to gold and silver as money. I don't think the governments are going to do it. I think it's going to be up to the people to do it. And so if you look at, for monetary use, how much gold and silver would you have to produce? I think, Ian, you were telling me it was like 500 million silver dimes a year was what the mint was producing.
Don't think that was me, but it could have been.
Yeah, I think somebody was saying that. But it's huge. And if you total up all the minting capacity in the world, it doesn't come close to that. And so I think capacity is going to have to ramp up. I think I'd rather see it be done privately than versus the government's doing it. Because if they go back on a gold or silver standard, it's not going to be redeemable. They're going to use it like they have all the time. Free market alternative.
I agree with Jim. I don't see retail demand decreasing now. I think too many people know, and they're talking to their friends and their relatives, and people have been on the sidelines thinking about it for years. Now beginning to understand the consequences of currency debasement that will play out. They haven't finished playing out. The $25 trillion that was made, $25 trillion that was made worldwide that we know of, that's not finished playing out yet. That's still leaking into the retail side of the financial world. I'm a relatively small player. I'm getting customers coming in buying $3 million in 100-ounce bars, $2 million in 1,000-ounce bars. My shop isn't even opened yet in Jackson. Yet somebody knocked on the door and they first time buyer $10,000. I've got crypto guys coming to me, never bought silver. They're buying silver every week now. Real estate guys never bought silver. They're buying silver now. I've got a client who I met at New Orleans Investment Conference last year. Highly successful in syndications. I think done over 11,000 projects. They're buying silver now. You get the person who bought the Eagles from Miles Franklin. I gather their fortune was made in retail. Well, if they're so sure about where their fortune came from, why aren't they putting money back into their company? No, they're buying silver. So this starts to leak out now, and human action it turns on a pin. I think we're at that turning point now where we're just going to get a flood of people in who just want it. They want it now, and they want it in their personal possession.
James, you of the same opinion on that?
So I think premiums may go down a little bit, like I said, between spot getting back toward 30. But at some point, I'm still waiting for the second half of the global financial crisis. And so I need to see some banks fail and some companies go under and some bankruptcies. And so in that fear, that's ultimately what's going to drive, I think, gold and silver into a mania is fear, more so than greed. What happens from here 22 to 30? I assume premiums may come down a little bit, but they're not going back down like they were in late 2019. That's not going to happen again. The horse is out of the barn on that. But then coming back to a reasonable level where you can get rounds at say $2 or $3 over spot, I think can happen next coming months and maybe this year coming up. But at some point, like I said, that there's going to be a true fear-driven market where it'll be very hard to find the stuff, and anything you find is going to be double priced at the spot.
Okay, and James, something else that I would love to get your opinion on, because we saw this story on Zero Hedge a couple weeks ago when they mentioned the the bids that the dealers were paying for the Eagles. As physical silver demand soars, bullion dealers offer huge buybacks. There's an interesting comment in here from Tyler Wall of SD Bullion. Obviously, you're not Tyler, so you can let me know if you have any comments. But I'm curious if you have any thoughts here. He mentions one of the individuals I speak to regularly who has firsthand knowledge of a Comex depository told me recently that they didn't think there's any unspoken silver left, just people haven't figured it out yet. Did you happen to hear anything more about that or have any thoughts on that?
Yeah, I think I know the specific warehouse he's talking about. And that warehouse, when you look at the size of it and what's happened in the last year or two, I'm sure they're talking from their side what they're seeing in their warehouse. And it's probably true because a lot of people who have metal in their warehouse are pretty savvy and they tend to always keep a position in bullion. The only thing I would say that counters that point is the fact that you have Brink's warehouse, which is a lot of industrial players in the Brink's warehouse. And so there may be silver that industrial players, may be willing to give up if spot goes up a wall. And then as well, SLV and JP Morgan. JP Morgan, I haven't looked lately, but I think their warehouse has got to be just under 160 million. A good portion of that is SLV, probably over 100 million ounces of it is SLV. And so I'm not sure how much of the 60 million remaining, would come to market if the price really starts moving up. So really it all comes back to, the price of the spot price of silver. You'll see a lot of selling up till 50, all the weak hands. And then as soon as silver finally blows through 50 and we start going into what a lot of us think will be an eventual triple digit mania phase, there's going to be selling along the way and there's going to be buying too. There'll be both.
Ian, is that what you're expecting at some point where we do finally break through 50 and go higher? Certainly would be an interesting environment to imagine.
Yeah, I think we're going to, when we break 32, a figure I've come to settle on for various reasons, I think it's going to run really fast, but it will pull back and it will form a floor in the 30s. And a lot of people will be too scared. So there'll be confiscation by fear because they say, well, hang on, 3 months ago it was 18 or 20. Now it's 30. So a lot of people will get shut out. But a lot of people are waking up to the precious metals are the last private financial item you can hold, apart from possibly fine art, fine wine, rare collectibles, which are hardly fungible or easily tradable. Silver, gold, it's the last bastion of freedom and privacy. When people work that out with 89,000 new IRS agents, what they tripled or quadrupled the force. They've done that for a reason. More financial repression is coming, more taxation on unrealized gains is coming. There will be a panic and people think, if I don't turn this into precious metals, or they'll come to realize if you don't turn a lot of your wealth into precious metals and get it off the books, as it were, get it private, you're going to either lose it by inflation, debasement of currency, or you're going to lose it by taxation, or it's going to get tied up in the new CBDC, which I think we will see by the end of next year.
Yeah, I talked with actually Chris Sky, who many people might be familiar with, who's up in Canada. He was recently in London, and he was mentioning a lot of the CBDC elements already being heavily rolled out there, which I think most people here are probably not a big fan of. Although we did have a great question coming in here. James, I'll toss this one to you first. Do the wholesalers or dealers have more of a role in setting premiums? Obviously, that's something that people wonder about with the high premiums. Where really does that come from?
The wholesalers are the lead on premiums generally. They have a consolidated market share. They have sharp elbows. There's only so many at the table. So think of it in terms of almost a cartel. Okay. And so the cartel sets a floor on their premiums, and it's not an explicit agreement that they have amongst one another, but they watch each other very, very sharply. And you can kind of see when the situation gets to their advantage, they take advantage. And they have record profits. That's the situation we've been in for the last few years. Wholesalers lead, retailers follow, but ultimately retailers have competition amongst thousands of other competitors. Wholesalers only have competition amongst a dozen or so.
And what is it that has the wholesalers with the higher rates right now? And what does it take? What could happen that could change that?
Oh, I mean, you know, you need investment and a build out of capacity in our industry. And the problem is they own a lot of the mints, or at least have majority ownership of a lot of the mints. So, you know, it's in their interest not to have competition. So you need new market entrants. You need new players coming into the market. You need a better two-way market. You know, there's all these things that are going to come to this industry. It's just a matter of time. But these are all the things. Ultimately, look, there's over $100 billion. I've done the estimate. I've done the research. It's a safe bet. There's over $100 billion already of private gold and silver stash in the United States alone. That bullion's going to turn over in this decade into the next. And the question is, you know, where is that market going to be made? There will be companies that make that market, and they'll do it efficiently. And so you'll have a situation where, they might not get new supply, but there's going to be tons of secondary supply flipping from one owner to another as the years progress.
Okay, and actually, one of the new entrants in that wholesale level is you, Jim. So, any comments on that?
I was kind of laughing. I definitely agree with James. It's you know, the mints don't raise their prices. From what I've seen and talking to other dealers, the mints don't raise their prices. You know, they do try to manage, you know, lock people into longer term contracts, because if the mints aren't running, then they're losing money. But they don't raise their prices when stuff like this happens. So I would agree that's largely at the wholesale level. But then that follows back to the mint, where you've got fixed capacity. If you're a wholesaler and you're selling out of everything you have, and people are wanting stuff and you can't get it from the mints until March, you know, it can raise the prices. But yeah, I think Kinesis' entrance into the market, our entrance in the market, hopefully can help. I mean, we're relatively small now. I know they're scaling up their capacities. They're sending us about 70,000 ounces every other week. And their capacity is expected to go up by 3 to 5 times, although they are going to start selling to the world market as well. But you know, as they ramp up, and then we're trying to fill some of that gap in capacity.
Yeah, and James, you and I were talking yesterday about the situation with the Silver Eagles, which is tied to that and the issue they were having with Sunshine Mint. Could you perhaps mention that and explain a little bit more about what's going on there with that supply chain?
So for everybody that knows, the Silver Eagles premiums are now at or just above where they peaked in 2008 global financial crisis. Back then, the spot got to 9 or just below 9. And, you know, you couldn't find Silver Eagles. And if you could, they were like 15, 16 backdated way out. So massive premiums happened then, and massive premiums are happening now. Again, right now, we don't have true fear in the market. We discussed yesterday about how Tom Powers, the CEO of Sunshine Mint, was on the Wall Street Silver YouTube page for an interview. It's like a 23-minute interview. And, you know, I basically got the gist of what he was saying by the end of the interview, around the 21-minute mark. He basically talked about how he was getting phone calls from private investors and different people who are willing to pay $3-4 over spot for 100-ounce bars. And his salespeople are excited about that, because surely they're not selling planchettes to the American U.S. Mint anywhere close to that. It's probably 10 times less than that what they're selling the planchettes to the U.S. Mint for. But Tom Powers also has a consistent business with U.S. Mint, whereas sometimes the private, buyers aren't calling his phone, right? So right now the question is to take advantage of it. If you're a businessman, of course you're going to. My hunch is they're probably, selling just enough planchettes to the U.S. Mint to keep that contract and that business relationship solid. And then as well, they're saying we have trouble with labor, we're having trouble with COVID, yada yada. But on the other side, I'm sure they're selling to the private players at much higher premiums that they sell those planchettes for. And so a businessman's going to take advantage when the business is hot, and that's precisely what he's doing. I mean, that's what I think all planchette makers would be doing if they have any sense.
Okay, and we do have a question coming in here from Jay, Coffee and Stocks, regular watcher of the show. Safest country for physical storage of your precious metals. Does anyone have any feelings on any of the jurisdictions in terms of storage?
You're talking about storage. I mean, for me, it's always been go directly to the ones that are the largest in the industry. So Brinks, go to Loomis, Malka, Amit, G4S. Those four are secure logistics providers that have been around a long time. Never pay above what the ETFs charge. So if GLD charges, 30, 40 basis points, you could find a decent, respectable, direct storage with one of these companies for about that price. The same on the silver side. I wouldn't pay more than SLV charges, or 50 basis points, directly with Brinks or Loomis or any of these other players. So you have direct communication with the people who oversee your stuff, no middlemen. That to me is the safest bet.
Okay, another question that comes in, and James, perhaps I will toss this one to you as well. Can you give an overview of the history of the premiums on the Eagles and Rounds?
So the Silver Eagle has been around since '86. They have a seniorage fee that the U.S. Mint charges. I'm guessing when it first started out, it was probably like $1. I think, for a long time, it was $2 during the 2010s. They raised it up the last few years twice. I think it's now at $2.95 an ounce over spot, what they charge wholesalers. But to Jim's point, they only have so many, right? So Tom Powers is, squeezing of the amount that he probably gives to the U.S. Mint at the time. I'm assuming, what are we talking, $1 million a month? That's basically it. So the wholesalers are used to 2, 3, 4 million of these per month. And so, obviously their premiums, they're charging at least 4 times what they used to in order to probably cover for that loss. And so that's a squeeze. That's a situation you have where it's jacked these premiums of Silver Eagles up. Silver Eagles are essentially collectible now. I mean, if you bought them back in the day at a lower premium, in the late 2010s, 2019, 2018, you get them 225, 229 over spot. What that meant was between the wholesaler and retail market, they were only making 29 cents between the two. Okay, it was a loss leader. I mean, the only reason you were selling with that price was to not lose market share and have people go to other dealers. So now, of course, the dealers are making more profit, but they don't have as much volume to take up. And so that's kind of why this has happened. For people that like Silver Eagles, just wait. I wouldn't dare pay the premiums. I mean, maybe buy 1 or 2 because you like the way they look, but don't go ahead. If you're looking for silver right now, look for premiums that are reasonable and look for brands and hallmarks that respected in a 2-way buy-sell bid. You don't want this wide, huge buy-sell bid where it takes forever to get back to even. You want something a little narrower and that's respected, and that you'll get good bid prices no matter what dealer you show up with that product.
Okay, and Ian, a question for you in terms of the spreads, where going back to the Silver Eagles, if people call in asking and they're really interested in Silver Eagles, what do you tell them? Is that something you recommend, or do you advise another product given the premiums right now?
I'm pretty stubborn. I generally refuse to sell them. I just I'm not going to play that game. Wholesale 13, 14, 15, 16 on the 2021s. It's just ridiculous. I mean, it's nearly time the retail price is worked out. When you're approaching 100% premium, you're not doing anybody any favors. Okay, they may or may not have some numismatic value in the future. I mean, the 86s and the 96s are sold regularly for around the $90 now. So you could play that game, but people need ounces and they need the lowest premium possible. But yeah, I agree with James. The reason I think a lot of the premiums are blowing out is that wholesalers and retailers have lower volumes. So to maintain a business model, I have to increase the premium. If you're selling half the product, the premium is going to double. If you're going to keep the lights on and keep paying the staff and the insurance and all of the ongoing costs, advertising, etc., the costs keep rising. So yeah, that squeeze on physical product is another reason for the rise in premiums, apart from the sort of collusion, you could say, in the wholesale market.
Yeah, just to defend the wholesale market a little bit, but if people could just not be so fickle, right? Where were you last summer? Where these wholesalers having to pay staff and all that stuff, not selling as much. I mean, we struggled. And then all of a sudden everybody wants it now, and they want it now. This guy wants 8,000, 7,000 ounces, and he wants it now. And it's like, well, how about we give you 1,000 ounces every other week, kind of thing. It's like, no, gotta have it now. So yeah, it's the whole FOMOing in and the smart money the last month was silver price is really weak, but the sales were incredible. It was the smart money coming in.
Okay. Yeah, and certainly I imagine that makes a difference when you want a large supply when supply is tight. That's going to be one of the things you run into. James, we have another question for you. Is the government aware of my purchases from SD Bullion?
Like if someone broke the law and did something where, the authorities had to go in and find out specifically what you've been doing with your money, maybe a government agent or someone like that could figure it out and track and trace the fact that you transacted with us. But for the most part, in order to have the government, come after you when you're buying gold or silver, you have to do something extremely stupid, like show up to a coin shop with 100,000 in cash and be demanding, gold or silver, doing some type of money laundering nonsense where you get put on the radar of the authorities. So no, I don't theoretically think, like I was trained in the early 2010s by the industry's anti-money laundering pro, essentially. And he came into our office and he said, basically, it's when people do things that are not in the ordinary, where they do something out of the ordinary, that's when the red flags, and that's when the authorities, get pinged, and that's when they come chase down and find out what you've been doing. For the most part, I don't think, governments are tracing and tracking, somebody's tube of silver eagles going to their home. I think that's a little bit paranoid. Personally, the idea of governments coming after people for their bullion, I think that's kind of ludicrous. They have other ways of raising funds and squeezing out their citizens than going door to door and smashing into people's doors and having shootouts. I think that's a very, in the range of possibilities, that's like Cooksville. I don't think that's going to happen.
I don't think it's Cooksville, but I do tend to agree with you in the sense of for them to go after people's silver and gold would have to mean they have to admit the value of it in their form.
They could put legislation to tax the hell out of it and do something like that, but for them to use coercion and force to get it, I find that hard to believe. And the other thing to remember too, in 33, when they confiscated gold, like 2/3 to 3/4 of the entire population of the gold that was out in the United States never got turned in.
Right. And they didn't go door to door, and that was back when people trusted the government more, and the dollar was backed by gold, so they thought they were not losing their gold; they were just swapping it for gold-backed dollars. So I agree with you.
That's why when you go to gold dealers now, you see all those old, 1920s gold semi-numismatic coins, and because 2/3 of them remained in people's pockets.
Yeah, and I think this time round, governments tend to be late. They seem to be criminal, lazy, and stupid, but they're not that stupid. I think they're more lazy than stupid. All they got to do is keystroke $1 billion, $10 billion into existence and offer people double spot. And a lot of people will capitulate and hand it over. Right. And as soon as we're in a fully digital system, then it might get harder to start to buy. Or if you do buy, then you are tracked. So going back to that question that was asked of James, does the government know of your purchases? Well, they will do when we're in a fully digital currency. They know everything you do. So get your gold and silver whilst you still have dollars that aren't completely traced.
Well, unfortunately, it does seem like we're headed that way, although, again, nice to have a lot of this insight before that happens. We're about out of time for our panel, so just wanted to offer any closing thoughts or anything else anybody would like to share before we wrap up here. And James, anything, any parting words of wisdom today?
No, I think, right now silver is reasonably priced. We're less than half of where it was spot-wise from 1980. So, have a long-term view here, looking out 5-10 years. I believe there's going to be a mania in silver at some point, and I'm looking forward to it. It's going to be fun, but keep your head on your shoulders, because silver is going to be come from being undervalued for decades to being likely overvalued, and in a place where it's going to be extremely spiky to the upside. And so you want to sell into that, take some profits off the table if you can, whether that you're speculating in mining shares or if you have too big of an allocation by then in your net worth into bullion. Certainly take some off and move into other asset classes that may be undervalued by that time. So, it's right now, bullion, I think, is one of the lone places where there's not a financial bubble, commodities as well. But we're probably moving into a major commodity bull, and bullion should perform extremely well because the currency is going to be called into question. The sovereign debts are going to be called into question, and that is a great recipe for bullion to finally get valued back toward fair and probably beyond the overvaluation levels.
We are seeing that happen now. So, James, thank you again for joining us. Jim, any final thoughts before we wrap up here today?
Yeah, I would say first off, in terms of dollar price targets, anything is possible if the dollar's going to zero, which I think it is. So people just really need to look at silver relative to oil or housing or the stock market, et cetera, to figure out when to trade into another asset class versus some dollar price target. If you sell it for dollars, you're going to be sorry. The other thing too is with the high premiums, despite benefiting from high premiums, there's ways to avoid it. If you've got enough money to buy a full bar, do it, and it can get turned by us into smaller products later. When we're less busy. Or there's Kinesis that's got relatively tight spreads over spot price and is redeemable, or PSLV to get the price exposure and then switch later. If and when premiums come down. So there's always to do that, but just be careful how you're doing it. And if you have no physical silver, get some at whatever price. You should have some for the shit hit the fan scenario.
Well, appreciate that, Jim of Silverback Precious Metals. And Ian, any final thoughts as we wrap up here today?
Yeah, I mean, I always was of the thought, when it reaches this, I'll sell all my silver and I'll buy this and I'll buy that. But just recently I was thinking, well, hang on, that's my financial privacy gone. I'm not going to get it back likely. So consider what a core position that you want to keep private, that you want to be maybe to help your children, help your neighbors, help your mom, help your dad, help your sister. People are going to be in a whole world of trouble. So folks, start focusing what is your core position that you're not going to get shaken out of, because that privacy will prove of an incredible value that we can't even perceive yet. When most people will be tied into the system and become serfs to the state again, whoever's in power. So I would say, get your core position and don't even think of trading it unless it's something that you're convinced is a better buy. Because once you leave that privacy, you may not get it back again.
Well, I want to thank all of you for joining us here at SilverFest III. It's been great to have you on the show throughout the years and get to know each of you and also share some insight onto what is happening in the retail physical silver market at this particular time, where a lot going on, and hopefully we answered a lot of people's questions today. So Ian Everard, Arch Silver Investments, Jim Forsythe of Silverback Precious Metals, and James Anderson of SD Bullion, thank you all for being here.
Well, thank you to Ian, Jim, and James, as well as everybody else who was at SilverFest and participated in that one. Hope you found that helpful. And before we wrap up, would like to thank Raina Silver, who brought us today's video. And Raina, as you may know, exploring 3 high-grade district scale assets, 2 in Mexico, 1 in Nevada, and the 2 in Mexico, which includes Gigi, their flagship asset, located in the Santa Eulalia mining district, which historically produced over 500 million ounces of silver, was half of one of the largest carbonate replacement deposits. They're looking for the other half. Phase 1 and 2 drilling has been completed. And out of nearly 1,500 samples, over 10% reported gold grades of 1.1 to 32.6 grams per ton gold, and 6% reported silver grades between 199 and 14,170 grams per ton gold. They also have their Bato Pilas project in another historically high-grade silver district, high-grade samples from 305 to as high as 42,000 grams per ton silver. And they've also discovered gold mineralization in the northeast region of their project there. And lastly, as Lauren McGaw, who was on the show recently to talk about their Medicine Springs drilling program, which is just underway, they've done a jasperoid sampling program, which has revealed carbonate replacement deposit zonation, including silver, lead, zinc, and copper. And they've also found high-grade silver samples there. We'll find out more about the results from that drilling program in the next couple of months. But certainly if you're looking for exposure to projects that have the potential to be high-grade district scale assets, Well, you can find out more about Reina Silver at reinasilver.com, and appreciate them sponsoring tonight's episode and bringing you today's show. And to find out a little bit more about what Lauren McGaw had to say about it, well, you can just click on the video that's coming your way now.